Dear learners, I am Siba. We are moving to lesson 4, Accounting for Business Transactions. In this lesson, we will study the meaning of source documents and the preparation of accounting vouchers. Accounting process begins with origin of business transactions and it is followed by analysis of such transactions. Now you should understand what is a business transaction. A business transaction involves exchange of values between two parties. That is a transaction which involves exchange of values between two parties. Every transaction involves two aspects. One is the giving aspect, another is the taking aspect. So, giving aspect will be credited and taking aspect will be debited. Business transactions are exchange of goods or services between two parties. The effect of these transactions are recorded in two accounts. First effect will be recorded in one account and the next effect will be recorded in the second account. Identify whether these are business transactions or non-business transactions. Manav commences business with cash rupees 2 lakh. Definitely, it is expressing everything in terms of money and it is relating to a business. So, it is a business transaction. Then, he deposited cash into bank worth rupees 1,60,000. Here also, Manav has started business and deposited cash. So, the amount of cash is also mentioned in terms of money. So, it is a business transaction. He purchased goods for cash rupees 25,000. So, this is also a business transaction because he is purchasing goods for business. Here are some more transactions. Identify whether it is a business or non-business transaction. Manav took out cash from the shop and handed over to his wife for purchasing household goods worth rupees 3,000. Purchasing is done for his house. So, it is not relating to business. So, it is a non-business transaction. He attended a family function and got a gift worth rupees 1,500. This is a non-business transaction because it is not related to business. Manav attended a family function. So, not related to business. So, non-business transaction. He paid monthly salary to his business employees, rupees 3,000. He paid monthly salary to his business employees means it is a business transaction. Next, we have to study source documents because this is a proof for recording various transactions in the business. All business transactions are based on documentary evidence. A document which provides evidence of the transaction is called source document or a voucher. Example of source documents: cash memo, invoice, receipt. Cash memo is received when there is a cash sales. When there is a sale of goods on credit, invoice will be there as a source document. When cash payment is made, receipt will be there as a source document. Source document is the primary evidence in support of a transaction. And source document is the first record prepared for a transaction. Basis for entries in the books of account is also source document. Source documents like voucher will be made for petty cash expenses or petty expenses. All documents are kept in a separate file in chronological order and serially numbered. So, in the case of source documents also, it is kept like that. All recording in the books of accounts is done on the basis of accounting vouchers, that is source documents. Voucher. So, now we have studied transaction, source document. Now, moving to voucher. Voucher is a documentary evidence in support of a transaction. It is a document to record the accounting transaction. A transaction with one debit and one credit is a simple transaction, and voucher is prepared for such transactions. Such a voucher is known as transaction voucher. Accounting vouchers are the written documents containing the analysis of business transactions for accounting and recording purpose. Accounting vouchers are prepared by the accountant, and an authorized person will countersign it. What are the features of accounting vouchers? It is a written document. It is prepared on the basis of evidence of the transaction. Accounting vouchers contain an analysis of a transaction. That is, which account has to be debited and which has to be credited. Earlier I have mentioned you, every transaction has two aspects. One aspect and another aspect, giving and taking aspect. So, one is debited and one is credited. Vouchers, usually accounting vouchers are prepared by an accountant and countersigned by the authorized signatory. We have cash vouchers and non-cash voucher or transfer voucher. That is the type of voucher. Cash voucher, non-cash voucher. Under cash voucher, we have debit voucher and credit voucher. Non-cash voucher can otherwise be called as transfer voucher. Debit voucher. These vouchers are prepared for recording transactions involving cash payments only. In all cash payments, one aspect will be the cash. Other aspect will be party to whom the payment is made or expense or item of property for which payment is made. Cash payments are made in which cases? It is made when there is an expense. When there is repayment of loan, cash payment is made. When goods are purchased, cash is paid. When assets are purchased, cash is paid. Here is a format of debit voucher. Here you have to write the firm name, debit voucher, voucher number, date, debit account, amount, credit account. Then in different columns, serial number, account name, amount, narration. Signed or prepared by the accountant. Countersigned by the authorized signatory. Here is a question to prepare debit voucher. On September 21, 2014, Messrs. Mohit Chemicals paid rupees 40,000 in cash and balance amount of rupees 1,60,000 by banker's check to HT Chemicals Limited. So, name of the organization Mohit Chemicals as top. Then debit voucher, voucher number, debit account, amount 2 lakh, date, credit account. Cash worth rupees 40,000 is paid and remaining from rupees 2 lakh, that is 40,000 will be deducted from 2 lakh. You will get 1,60,000 in the form of check. So, cash and bank cash 40,000, bank 1,60,000. Prepared by the accountant, so signed by him. Countersigned by authorized signatory. Another type of debit voucher you can prepare is in this format. For that, I have prepared another question. Following transactions took place in Messrs. Tarun Retailers. Prepared debit voucher. 2014 January 1st, bought materials for cash memo number 20, rupees 17,200. January 5, wages paid for the month of December 2013. Wide wage sheet number 35, rupees 5,000. So, first transaction, purchase goods. So, name of the organization, voucher number, date, and you will write debit purchases account, purchase goods for cash. So, purchases account debit to cash, one aspect is cash and another aspect is purchases. So, you will write only in the debit voucher the item to be debited.